Today, we're diving deep into one of the most talked about topics in the financial world, the real estate market. And who better to lead this conversation than the legendary investor himself, Warren Buffett? Buffett has recently hinted at major shifts happening in the real estate market, with his iconic phrase, "A storm is brewing." But what does he mean by this? Is the real estate market headed for trouble? Or is there an opportunity for those who are prepared? We'll break it all down for you today, from key factors impacting the market to actionable insights that you can use to protect yourself and even thrive in uncertain times. Before we dive into the details, make sure to hit that subscribe button. It really means a lot to us and helps us bring you more insightful content. Plus, you won't want to miss our future videos where we cover more topics like this, including tips to grow your wealth and navigate the turbulent waters of the economy. So, let's get started. When Warren Buffett speaks, the financial world listens. His wisdom and investment strategies have stood the test of time, and his predictions often come true. Over the years, Buffett has remained cautious when it comes to the real estate market. While he's made strategic investments in the sector, he's always emphasized that this market is unique compared to other asset classes. Recently, Buffett raised concerns about the current state of the real estate market, particularly in light of rising interest rates, inflation, and other economic headwinds. He used the phrase, "a storm is brewing," implying that significant changes or challenges are on the horizon. But what exactly does Buffett see that has him worried? First, let's take a closer look at the macroeconomic factors that are influencing the real estate market right now. Then, we'll dive into how these factors align with Buffett's cautious outlook. One of the most significant factors impacting the real estate market today is the rise in interest rates. As central banks around the world, including the Federal Reserve in the United States, have raised interest rates to combat inflation, borrowing costs have surged. This directly affects both residential and commercial real estate markets. Higher mortgage rates. For home buyers, higher interest rates mean higher mortgage payments. As a result, many potential buyers are being priced out of the market or are delaying their purchases. This leads to decreased demand for homes, which could push property values down over time. Impact on commercial real estate. The commercial real estate sector is also feeling the pressure. Rising interest rates increase the cost of financing for developers and businesses looking to expand. This can slow down new construction projects and affect the profitability of existing properties. Warren Buffett has often spoken about how rising interest rates can put a brake on the economy. In the real estate market, this brake is especially pronounced because of the dependence on borrowing for both developers and buyers. Buffett has pointed out that as interest rates rise, fewer people can afford to buy homes or invest in real estate, which could lead to a slowdown in the market. He has likened this situation to a brewing storm because it may not result in an immediate crash, but it can create long-term challenges for the industry. Another key factor that Warren Buffett highlights is inflation. Inflation affects every aspect of the economy, and real estate is no exception. While real estate is often seen as a hedge against inflation, particularly because property values tend to rise over time, inflation can also create challenges in the short term. Rising construction costs. One of the immediate impacts of inflation is the rise in construction costs. Materials like lumber, steel, and concrete have seen significant price increases over the past few years. This has made new construction more expensive, which in turn has led to higher prices for both residential and commercial properties. Rental market pressures. Inflation also affects the rental market. As the cost of living rises, landlords are forced to raise rents to keep up with their own increased expenses. However, there's a limit to how much rent can rise before tenants start to push back, leading to potential vacancies or rent freezes. Warren Buffett has expressed concerns about inflation's ability to erode purchasing power. In the real estate market, this erosion can make it harder for people to afford homes and for businesses to invest in new developments. The result? Slower growth in the real estate sector and the potential for a market correction. Another reason Warren Buffett warns of a brewing storm in the real estate market is the issue of overvaluation. In recent years, property prices have surged to record highs, fueled by low interest rates, increased demand, and a limited supply of homes. While this has created a boom in the real estate market, Buffett cautions that this level of growth is unsustainable. Residential real estate. Many experts believe that the housing market is in a bubble, with prices far outpacing income growth. Home affordability has become a major concern in many areas, and if interest rates continue to rise, this bubble could burst. Commercial real estate. Similarly, commercial real estate has seen significant price increases, particularly in areas like office spaces and industrial properties. However, with the rise of remote work and changing business models, demand for office space has decreased, leading some to question whether commercial real estate values are inflated. Buffett is known for his focus on value investing, buying assets that are undervalued and have long-term potential. He has expressed skepticism about the current real estate prices, suggesting that many properties are overpriced relative to their true value. This overvaluation, combined with other economic factors, is why he believes a storm may be on the horizon. One of Warren Buffett's core investment principles is to avoid speculation. He believes that markets driven by speculation rather than fundamentals are destined for trouble. Unfortunately, the real estate market has seen an increase in speculative behavior in recent years. Flipping houses. The practice of buying homes, making quick improvements, and selling them at a higher price, commonly known as house flipping, has become more popular than ever. While this can be profitable in a booming market, it's also risky. If property values decline or the market slows, speculators can be left with homes they cannot sell or must sell at a loss. Short-term rentals. The rise of platforms like Airbnb has also fueled speculative investments in real estate. Investors are buying properties with the sole intent of renting them out on a short-term basis, banking on high rental yields. However, if travel demand drops or local regulations change, these investments could quickly turn sour. Warren Buffett has repeatedly warned against speculative behavior, advising investors to focus on long-term value rather than short-term gains. In the real estate market, speculation can create artificial demand, driving prices higher than they should be. When this demand disappears, it can lead to sharp declines in property values, a scenario that could contribute to the brewing storm Buffett is warning about. Technology is another factor reshaping the real estate market, and Warren Buffett has noted its potential to disrupt the industry. From online real estate platforms to the rise of remote work, technology is changing the way people buy, sell, and use real estate. Online real estate marketplaces. Platforms like Zillow and Redfin have made it easier for buyers and sellers to connect, cutting out traditional intermediaries like real estate agents. While this has streamlined the process, it has also led to increased competition and more aggressive pricing strategies, further inflating property values. Remote work and office space. The COVID-19 pandemic accelerated the shift to remote work, which has had a profound impact on the demand for office space. Many companies are downsizing their office footprints or shifting to a fully remote model, leading to concerns about the future of commercial real estate. Warren Buffett has always been a fan of businesses that can adapt to technological changes. However, he is also wary of industries that are slow to evolve. The real estate market is facing a wave of technological disruption, and those who fail to adapt may be left behind. So, with all these challenges on the horizon, what does Warren Buffett recommend for those looking to invest in or navigate the real estate market? While Buffett doesn't often give direct advice on real estate, we can infer a few key lessons from his overall investment philosophy. Focus on value. Just as Buffett advises with stocks, focus on real estate investments that are undervalued or have long-term potential. Avoid overpriced properties that are being driven by speculation or market hype. Be patient. Buffett is known for his patience in investing. If the real estate market is headed for a storm, it's important not to rush into any major decisions. Wait for the right opportunities to come along, and don't feel pressured to buy at the peak of the market. Diversify. Buffett has always emphasized the importance of diversification in an investment portfolio. Don't put all your eggs in one basket, whether it's in real estate or any other asset class. Stay liquid. In times of economic uncertainty, it's essential to maintain liquidity. Buffett always keeps a large amount of cash on hand to take advantage of opportunities when they arise. In the real estate market, this might mean waiting for prices to drop before making any major investments. So, there you have it. Warren Buffett's warning about the brewing storm in the real estate market and what it means for you. Whether you're a homeowner, an investor, or simply curious about the market, it's essential to stay informed and be prepared for the potential changes ahead. If you found this video helpful, don't forget to like and subscribe to our channel. We have plenty more content coming your way that will help you navigate the world of finance and investing. Thank you for watching, and we'll see you in the next video.